Hey guys, Drew here from swingtradingbootcamp.com, and let's go ahead and take a look to see what the market has done for us with the week closing August 12th, 2011. Well, we started out the week on another down note with a big gap down here, as you can see from the chart I have up of the diamonds. Big gap down in the sell-off. Then we had a big reversal day on Tuesday. Volume was high. We sold off to a new low and then immediately reversed and actually closed up near our highs. And then Wednesday came, we had another gap down and another sell-off. But one thing I want to point out here, and I want you guys to take note of, is the volume as this extended down move is happening. You can see here the volume picking up, increasing all the way down until Monday. Then it's kind of an even level of volume. Then we get a reversal day on volume, but more importantly, Wednesday, Thursday, and Friday's price action that we saw. We put in this established low on Wednesday. The next day here was followed by an inside day on lower volume. Okay, that shows us that price is stalling and there's some indecision in what the market is going to do next. Thursday and Friday are quickly followed by lower volume days. So you see this retrace that we have here in the market is accompanied by lower volume. Not a really good sign for the outlook of things to come. You can see the decreased volatility we saw on Friday as well, accompanied with this low volume. If you look at the NASDAQ, you'll see basically the same thing. Inside bar, and then we have decreasing volume again going into Thursday and Friday. Here's a chart of the spiders putting in a new low, the reversal on Tuesday, Wednesday's inside bar, and a slight retrace here on lower volume as we closed out the week. Almost every sector ETF that you want to look at basically has the same chart pattern. Tremendous weakness across the board. Nothing except gold and silver really showing some relative strength, of course. But let's take a look through some of the ETFs. You see the sell-off here again, and look at the volume patterns as we go through these charts. The sell-off here into Monday, this increasing volume, and then volume starts to dry up. That's the energy sector, XLE. Let's take a look at the real estate sector. If you look back at this little double top pattern we had back here, and then the sell-off came in after the news came out last week, selling off, and again now you see a little bit different pattern here, increasing volume into Monday and then immediately jumping. No inside days created here. Really a strong retrace, but as you can see, volume starts to die off on Thursday and Friday as well. Let's take a look at the retail ETF. Again, same chart pattern. The lower high was established here, sold off to a lower low, and then continued the sell-off with the rest of the market. Basically the same chart pattern as the overall market. The inside day followed by Thursday and Friday's low volume bounce. Home builders, of course, just getting wrecked. This was a new low that we had on one of our previous blog posts, and you can see that it's basically sold off with the market as well, and now creating a very similar chart pattern. Financials, more of the same. Again, lower high, selling off to a new low, and then consolidating in a little anemic bounce here Thursday and Friday. Go through the semiconductors. This was on our relative weakness list. You can see this potential double bottom that we established. Here's a low, a bounce up to a lower high created here, and then it sold off with the rest of the market, again putting in basically the same chart pattern as every other sector that we're looking at. Here's the USO, the United States Oil Fund. Again, similar volume pattern coupled with price action, and you can just take a look at the charts as we go through. On to the next one, the oil services. Dramatic sell-off, 160 down to 120. Now, if you want to call this a bounce, very hard to establish, but from this oversold position, we are getting a bit of a retrace here. Again, same volume pattern, same price pattern. Here's the steel sector, the SLX. Again, very similar to the relatively weak patterns that we showed you previously, and now a lot of volume coming into this sector here on Friday. I haven't really looked through the individual charts in that sector yet. We're concentrated elsewhere for the time being, but again, a very similar chart pattern. Here's the broker-dealer ETF. Again, more of the same. And finally, the technology sector, SPIDER, the XLK. Again, similar volume and price patterns that we saw in everything else. Gold moving to new highs and now putting in a slight retrace as the overall market bounces up. Gold pulls back a little bit Thursday and Friday, as you can see here. The gold miners have not broken out yet to new highs. Here's the GDX, the Market Vectors Gold Miner ETF. Big sell off here, and then it bounced back up, decreasing volume pattern again. So we're kind of watching some of the gold miners to see how they react in this next move in the market this upcoming week. And the silver ETF, the SLV, started to go up. Big sell-off back to the 50-day, and now it's just kind of consolidating around this level here. Still above this level that you can see here. This high was put in here, and this high straight across. So we're back right above that level, hovering. Volume drying up as well. So what we'd like to see is a move to the upside on increased volume as we go into next week. If you take a look at some of the individual stocks, a lot of big bounces, some of the dramatically oversold stocks, Hovanian, which is a home builder, is back down to a dollar stock. It's under $2 now, but a strong bounce coming into this week wouldn't surprise us at all. Going back, if you're trading these low priced stocks. As we just go through the list, we can take a look at some of the stocks that were really bouncing up as the market came from an oversold position. Electronic Arts here, dramatic sell-off. This is one of our strong stocks, but this move here alerted us to the potential down move, and it just sold off with the rest of the market down to new lows. So as we go into next week, what can we expect to see in the market? Well, a move continuing back towards the 50-day isn't out of the question, of course, but this volume and price pattern is indicative of a retrace and a dominant down channel. So we want to see some confirmation either way. If we get a drift up on lower volume still, or even increased volume and then moving to lower volume, we expect the next move to be down. We could open up the morning with a big gap down, and everything just starts to fall apart again. We are not trading the long side at all at this point. We are simply listening to the market, waiting for its next move and determining what stocks we want to trade to the short side. The only long things that we are looking at are the inverse ETFs, of course. So that would make sense to you if you're not comfortable with necessarily trading the short side. I would suggest that you start to look at the list of inverse ETFs that we have listed on our blog in our free education section at swingtradingbootcamp.com. And for more information, you can always follow along or sign up for our free newsletter as well. So that's it for this week. We'll see you next week, and thank you for watching.